Do you run a small business? Are you always worried about taxes? You're not alone. A lot of small businesses feel the pinch of tax compliance burden. If you are a baker, you want to be baking delicious confections. If you're a designer, you want to be designing great animations, not maintaining books of accounts and worrying about tax audits. That's why the government offers a presumptive taxation scheme. Enough of jargons. Simply put, this scheme allows you to worry less about compliances and focus more on growing your business. Now, how exactly does this work? When you file your tax return, instead of filing ITR 3, which is the business return, you file a simpler ITR form, the Sugam form. Still confused? Let me introduce you to Sakshi. She owns a bakery. In the hustle to meet order deliveries and maintain work-life balance, it leaves her no time to focus on her accounts and taxes. Here's another budding designer, Vinayak, who keeps on jumping from one freelance project to another, leaving him juggling for time to streamline his accounts and taxes. Presumptive Taxation Scheme comes to their rescue, where businesses like Sakshi's can consider income at a predefined rate of 6% of the total sales. And professionals like Vinayak can take 50% of the total receipts as income and pay taxes on the same. That's a relief, right? Here's the catch. Sakshi and Vinayak cannot claim expenses such as depreciation on ovens and laptops, repairs, electricity, utility bills, etc. But they can continue to claim other tax breaks for investments like tax-saving mutual funds and LIC premiums. Now Sakshi is in a dilemma. She wants to claim the electricity bill and rent paid for her bakery, but she also wants the ease of presumptive taxation. However, if she decides not to continue with the presumptive scheme, she loses the option to choose the scheme for the next 5 years. So it's an easy choice. During the end of the financial year, Vinayak and Sakshi will calculate their tax liability based on the applicable income tax slabs and pay advance tax only once on or before 15th March. They require basic documents like PAN, Aadhaar, Form 26AS, etc. And since they have opted for this scheme, they do not need the books of accounts, P&L or balance sheets. They will simply need gross receipts and gross profits. Isn't it great? Now they are able to focus more on growing their business, worrying less about taxes. We are Quicko, on a mission to simplify taxes for all.